Welcome to The Explainer. We're diving straight into a massive, critical turning point happening right now in the financial world. For decades, traditional banks absolutely owned the payment space. But recently, a wave of incredibly nimble modern payment specialists and massive tech giants have completely disrupted the status quo. They're challenging legacy banks right on their home turf. So how do traditional financial institutions actually fight back? Today, we're unpacking the new strategic playbook legacy banks are using to reclaim the payments ecosystem, step by step. Okay, let's dive into this. Here is our strategic briefing roadmap. We're looking at 1. Disrupting the payment score, 2. The bank's trust advantage, 3. The strategic partnership playbook, 4. Top-down strategic transformation, and finally, 5. Reimagining the customer experience. Let's get to it. Starting off with Section 1. Disrupting the payments core. Historically, payments have literally been the bedrock of banking. To put that into perspective, 40%. Think about that for a second. On average, a staggering 40% of a bank's revenue comes directly from payments. Not to mention, payment interactions are by far a bank's most frequent touchpoint with you and me, their customers. But lately, this absolute lifeblood has been under explosive threat. Fintechs and big tech players are rapidly scaling global platforms, and they're doing it with massive investment envelopes. They operate with lower regulatory burdens and 0 decades-old legacy tech holding them back. So for banks, the real threat here isn't just about losing some revenue margins. It's the danger of being totally disintermediated, literally losing that direct daily relationship with the customer. Now, what's really interesting about this slide is the stark contrast on this modern financial battlefield. On one side, you've got fintechs. They're incredibly agile, their user experiences are laser-focused to solve very specific pain points, and they just have fewer regulatory hurdles to jump over. But let's be clear, banks are definitely not bringing a knife to a gunfight here. They possess massive capital, regulatory safety that only comes from decades of strict compliance, and above all else, deep entrenched customer trust. And that brings us perfectly to Section 2, the bank's trust advantage. Listen to what Ethan Teese, the Executive General Manager of Payments at the Commonwealth Bank of Australia, points out here. Customers have a deep trust in their bank to keep their money safe. And safety? Well, it's absolutely critical in today's payments landscape. We're talking about an instant payment environment where financial risk can literally manifest in milliseconds. A shiny new app might be super convenient for buying a coffee, sure, but when a massive, high-value transaction is on the line, 50-plus years of proven safety and regulatory compliance becomes this massive, almost impossible to replicate competitive moat for traditional banks. Because this banking infrastructure, it goes incredibly deep. It's not just about consumer trust. We're talking about the actual financial plumbing of the world. Banks have direct access to the clearing systems that settle and move the money behind the scenes. They're direct participants in foreign exchange markets. At the end of the day, almost all of those nimble fintechs and payment startups, they eventually have to plug their beautifully designed apps right back into these core banking networks to actually move the money. The banks are, for sure, the indispensable foundation. So, moving on to Section 3, the Strategic Partnership Playbook. Sandeep Lal, the Managing Director of Payments and Digital at DBS Bank, actually hit the nail on the head here. He points out that different players are going to excel at delivering different pieces of the puzzle. Realizing where you shouldn't compete is honestly just as vital as knowing where to win. Banks are waking up to the fact that the total customer base and the sheer scale of the landscape is just way too massive to conquer alone. They can't build everything in-house anymore. So the crucial point is that we're seeing a highly effective division of labor emerge. Startups and tech companies are taking the lead on the front-end checkout experience and user interface, the exact stuff they do brilliantly. Meanwhile, the banks, they're playing to their strengths. They handle the heavy lifting of credit, cross-border clearing, and merchant acquiring, which is basically the complex back-end plumbing of processing merchants' payments. It's a total win-win ecosystem. The tech companies get the rock-solid infrastructure they need, and the banks get to participate in modern ecosystems without having to invent every single feature from scratch. And this brilliantly illustrates how we're moving away from those closed-off, rigid banking vaults toward a truly open payments ecosystem. APIs are completely reshaping connectivity. They're acting like these digital bridges that just blow the ecosystem wide open, allowing third parties to interact in ways we literally haven't seen before. They seamlessly link that slick fintech front end with a secure banking backend to instantly exchange value. Now, Section 4, Top-Down Strategic Transformation. Participating in that open ecosystem requires some serious internal change. To compete in this new digital reality, senior executives are having to completely restructure how their legacy institutions operate, and it really takes 3 steps. First, it has to be a top-down mandate. You absolutely must bring the most senior leaders and the CEO on board to break down internal silos. If leadership doesn't get payments, the whole transformation fails. Second, institutions have to view payments as a holistic, core business in its own right, not just some basic background hygiene factor. And third, they need a complete overhaul of their core architecture. Actually, let's double-click on that third point, something Rakesh Jha of ICICI Bank really emphasized. To deliver digital changes at speed, a bank's core architecture has to become highly modular. Think of it like swapping out Lego blocks instead of trying to rebuild a solid concrete foundation. You just can't have a rigid, decades-old mainframe acting as a bottleneck anymore. By adopting this modular approach across the entire bank, teams can innovate rapidly, plugging in those strategic partnerships we talked about earlier without, bringing the whole system crashing down. Let's move to Section 5, reimagining the customer experience, and see how this builds into improving daily life. Because at the end of the day, all this back-end restructuring means absolutely nothing if it doesn't improve the daily life of the end user. Modern banks have realized a pretty crucial truth. Convenience dictates loyalty now. The strategy today is all about meeting the customer exactly where they already are. It's no longer just about offering a checking account, it's about stepping way beyond traditional finance. People are shopping on Amazon, they're scrolling social media, they're booking travel. Banks have to be present and completely seamless in all of those digitally enabled environments. So what does this actually look like in practice? Well, banks are offering safe buy now, pay later credit options that meets consumer demand for flexible credit while still applying rigorous banking safety standards. They're also building seamless, one-click cross-border remittance tools straight into their mobile apps. And they're leaning heavily into embedded finance, integrating tools that help hospitality businesses run their operations or helping shoppers find tailored discounts right when they need them. They are actively bringing two-sided marketplaces together, which benefits both the consumer looking for value and the merchant trying to grow. Now, just to ground all of this, the strategic shifts we've been walking through today, they aren't just hypotheticals. These insights are powered by deep McKinsey & Company analysis, drawing directly from the real-world experiences of leading banking executives across Asia. That gives ultimate credibility to the fact that this hybrid approach, leveraging that immense legacy trust while aggressively partnering for digital agility, is exactly how the biggest players are going to ensure their survival and growth in the modern era. Which leaves us with this final, provocative thought for the executives and strategists tuning into this explainer. Are you trying to build a walled garden, desperately keeping everything in-house in a world that is rapidly opening up? Or are you ready to use your foundational strengths to power the broader ecosystem? Because as we've seen, the future of payments absolutely belongs to those who choose the latter. Thanks for joining me on this explainer, and keep questioning how the systems around you are built.